So, hey, what's going on, guys? My name is Wayne Barrett. I am a mortgage professional. I'm also a realtor for 6 years, a mortgage professional for 14 years. And since 2010, I've been doing modifications and short sales. I wanted to make this video for you because I am actively an investor that I go after homeowners that are facing foreclosures. We either help them to do modifications, we help them to do short sales, or we buy their homes cash. What I've been running into a lot because of the whole COVID situation is that a lot of homeowners feel and as if a Chapter 13 is an end all be all, and also they believe that the statutes that are in place right now will last forever, and they won't. So I want to make this video, give you some great information, help you to possibly save your home or help you to make a decision as to what you want to do moving forward. All right. Um, so first of all, let's start with how you as a homeowner, you can call the bank, ask the bank to figure out the first steps of attacking or finding out how to be more efficient in solving the problem. All right. One, you want to call the bank and identify what kind of loan you have. I find that most individuals don't even know if they have a conventional FHA, adjustable, VA, whatever it is. A lot of people don't know, and it's very important that we know what kind of loan you have, because when you know what kind of loan you have, you also understand what kind of remedy can be produced by the bank. All right. You want to confirm if it's a fixed rate or adjustable rate or interest only. I know that since the last crash, there's not too many adjustables or interest onlys, but they still are a few lingering out there. All right. Ask for the amount owed to cure the default. So if you're behind on your mortgage, this is for people that are behind on their mortgage. If you're behind on your mortgage, you want to ask the full amount, because the amount that you may have and the amount that the bank has can typically be different because of fees, interest, and whatever else the bank feels that they want to put on top of that. All right. Also, if there's an attorney involved, the attorney puts his fee in there as well. Ask, when will the file be given to an attorney? So initially, when you're in foreclosure, it starts with the bank, but then it's transferred over to an attorney to follow through with the proceedings. Okay. Once it gets to the attorney, it can be a little bit more difficult. So you want to know how much time you have before this file is transferred over to an attorney, if it is going to be transferred over to an attorney. All right. Every situation is different, but these are just some standard questions. All right. You also want to ask, what are the available programs you have at your disposal? So once you've identified the following, what kind of loan you have, what your rate is it adjustable, is it fixed, how much you're behind, you want to ask them straight up, what can I do? What are some things as my bank you can do for me to help me through my difficult times? You also want to get off that phone, always taking the name, ID number. And I like to jot down the times that I call. All right, just in case something happens and you may have to take legal action. You want to have, you always want to have good footnotes. You always want to have information that can help you, in case, someone drops the ball and, your home, your life is on the hook if someone makes a mistake. All right. So these are the typical cures that most homeowners get. You get a forbearance, a modification, or a streamlined refi if you don't wait too long when you fall behind. So what a forbearance is, a temporary fix. To give you the best example of what a forbearance is when you possibly may get sick, get injured on the job, and you need a temporary fix. You may say, hey, I've fallen on hard times. A forbearance will give you a cure for about 3 months or so, sometimes up to 6 months, depending on what kind of loan you have. And it'll help to reduce your payments or eliminate or limit your payments for a time being, but it's not an end all be all. It is not a permanent fix. So if they eliminate payments for 3 months, all right, you'll have to pick back up. If they lower your payment for a bit, you'll have to pick back up. It's not forever. A modification. Now, if you qualify for a modification, because there is a qualification process, if you qualify for a modification, you will get that for the life remainder of your loan. Okay, so a modification is something that will last a little bit longer. Now, anyone that's done a modification through these times now understand that they do a trial. So most times they will do what's called a 3-month trial just to test you out, and then they'll make it a permanent fix if you're able to make the first 3 months payment. Again, every situation is different. I'm just giving you an outline. All right, a streamlined refinance is a great option. And now this is typically for FHA homeowners. All right, you can do a refinance that could possibly lower your payment without any income docs. All you need is appraisal, sometimes not even an appraisal. You can just get everything done 1, 2, 3 without a lot of hassle, very minimal documentation. Very clear on this, guys. A forbearance modification is streamlined. None of these guarantee to lower your payment. So I know there's a lot of misconception that if you negotiate with the bank, your payment must go down. That is not true. Okay, it is strictly up to the bank what they perceive as the best remedy so that they can get their money back. That's their goal. They want to get the money that you're behind back into their pockets. Moving on to the next slide. All right, remember we talked about a qualification process, okay? You have to qualify for a modification. You have to qualify for forbearance. You have to, there are qualification criteria that every bank has, every loan has. So again, I'm giving you just a standard outline. I don't want you to think that this will work for everyone. I want to keep that out there. I need to make that disclaimer so that there's no confusion, because when I'm calling or my team is calling on the phone, there's a lot of confusion and misconception that these things will actually lower your payment. In most cases, they will not, okay? These are the documents that you typically have to submit in order to qualify for a modification. Even at Chapter 13, you have to submit these documentations as well. All right, or in some cases a forbearance. Okay, the last 2 years W-2s, all pay stubs in the last 30 days. So if you get paid every week, that's 4. If you get paid every 2 weeks, that's 2. If you get paid once a month, that's 1. Okay. Most recent 2 months bank statements. They're going to want to see every page. So if that page on your bank statement says 1 of 6 and the last 2 pages are blank, you need to send in every page. Okay. Hardship letter. This letter outlines exactly what's wrong, why you're behind, and why you feel that you can catch up. Number 5, an expense sheet. Typically the bank will give you this, but this is a sheet that will outline all the expenses outside of your credit cards, your mortgage. They want to know what you're paying for gas every month, what you're spending on food, other expenses. What are you spending on healthcare? What are you spending on everything that takes away from your monthly income? They want you to outline on this document. All right. In most cases, some people get denied. All right. Not everyone qualifies for a modification, a forbearance agreement, or a streamlined refinance. All right. So a lot of you guys will see this. Now, if you are denied, the one thing I can say is you can always resubmit. There's nothing that says you cannot resubmit, but this is a key component. If your home is up for sale and you've only got about 2-3 weeks to the sale, I would say you're cutting it super close, and the bank can string you along and still foreclose on you. You need time. So when you're going for these products, you need to make sure, like, once you're 30 days behind, some banks will tell you have to wait till you're 90 days behind before they can help you. Go figure. But you want to typically start any one of those 3 processes immediately, as soon as you know that, hey, I'm running into hard times and I need some help. Okay, you can resubmit, but again, they do not stop any process of the foreclosure until you are approved. So even though you submitted all your paperwork, the process is still moving forward. Oh, let's go back a little bit. Sure. All right, and here's the biggest chapter that I wanted to go over, guys. Chapter 13. It is not a permanent fix. Chapter 13 is a temporary fix. Chapter 13 is something that you must qualify for. And Chapter 13 will not lower your mortgage payment all the time. Okay, this is such a big thing. We get on the phone with clients. Hi, hey, calling about the home. We see that's in foreclosure. Hey, I filed Chapter 13. I'm going to be all right. Click. Stop calling my phone. Click. Whatever. We understand everyone's under pressure. It's not the best situation to speak. But it's this false pretense. And then when we look up the house 2 or 3 months later, we see that the house was put back into foreclosure and the home was foreclosed on. and we could have saved the homeowner, we could have gave them some money. So this is the most important chapter to me, because this is where I see a lot of people lose their homes, because they get into this false sense of security. They kind of drop their guard, and then boom, the foreclosure still happens. Okay. A chapter 13 is a great way to hold off the bank, all right, up to the morning of the sale of your home. Again, it's a temporary fix. It is not a permanent fix, because when you do a chapter 13, you're going to have to appear in court in front of a judge, and also the bank is going to send their own attorney to look over your paperwork. You're going to have to submit all those things that we talked about in the previous slide: your W-2s, bank statements, pay stubs, hardship letter, and now this time the court is going to look over the documents. Okay. Even if you have an attorney, this is another thing. You can ask these attorneys very straightforward: will I get qualified? They cannot tell you that. They cannot guarantee you that they can get you qualified. All right. All they're going to do is they're going to gather your documentation, take that payment, and they're just going to submit it to the court, and the court is going to be the one to do the calculations and make the decision. So honestly, you're paying someone to do nothing but gather documentation. That's really it. Okay. You can file your own chapter 13. You can get a payment plan. You can show a hardship down at the office, and they'll make sure to give you, hey, you'll just pay $50, $75. It all depends, again, guys, on your situation. All right. So if you file a chapter 13, it's a temporary fix. If you miss any one of the appointed dates, your home is automatically kicked out of chapter 13 and back into foreclosure. Okay. You can go to chapter 13, and the judge may say to you, hey, your payment's $1,000. You owe the bank $25,000. They're proposing a new payment of $1,500 for the next 3 years or 4 years. Can you afford that? You say yes, no problem. The judge will give you that new $1,500 payment, a $500 increase. But if you ever default on any one of those payments, guess what? You then go ahead and get kicked out of chapter 13. Your home gets kicked back into foreclosure, and you cannot refile chapter 13 in most cases. All right. So that I want to make it fast. Please read this over, guys, and double check all the information I'm sharing with you. All right. So here's a recap. All right. Why chapter 13? It stops the bank up to the morning of the scheduled sale. The bank must stop the process immediately, as long as you get it in there before. Typically, you fax in your documents that you get from the bankruptcy courts. All right. It's a temporary band-aid that allows you time to plan. All right. If you're denied a modification or forbearance agreement, it is the ace in the hole that you will definitely want to keep. All right. Do not depend on an attorney to guarantee you an approval filing. Be aware that your payments can go up in a chapter 13, just as in a modification. All right. So I can't stress that enough, guys. All right. And of course, I know a lot of times, a cash offer is not what you're looking for. Look, you went through a lot of stress. You want to keep your home, but it can help you to avoid a foreclosure on your credit report. Up until the time before they foreclose, it's just late payment. It's not an actual foreclosure. Depending on if you have a FHA conventional loan, you're going to have to wait a few years, 2-3 years, before you can go ahead and apply for a new mortgage, because they won't allow you, because you have an actual foreclosure on your credit report, not just late payments. In a cash offer, you can eliminate all debts, all liens, all violations that are on there as well. So it is helpful. And number 3 is the most important part. When you get foreclosed on by the bank, most cases, 99.9% of the time, I would say, you get zero. Okay, you get zero, and you essentially could have gotten cash to move, to help you relocate, if you would have taken a cash offer over trying to fight with the bank, wait until the last possible minute, reaching out with only a week or 2 weeks left, and no one can stop the process because there's just not enough time. All right. And so you miss out on cash that could have been yours. All right. Also, there's a short sale. This is great for anyone that, we run across a ton of people that have tax liens that are attached, mechanics lien, any kind of liens or violations, or even the bank fees, they're just too high. A short sale is a great fix. A short sale is also a great way to stop the foreclosure process once we get it approved by the bank. So you see it here. It's great for upside down inequity. So if you owe 105,000, but your home is valued at 100,000 or less, short sale is a great way. If there's considerable amount of damage to your home and you just can't sell it because of the amount that's needed to fix it versus how much you owe, just doesn't make for a great deal for anyone to purchase, a short sale is a great answer. Homeowners may have multiple loans or liens on the home. Again, you may have a first mortgage, a second mortgage, and you need to eliminate one. So a short sale is a great way to stop to help to get rid of one of those mortgages as well. And we may be able on some short sales to negotiate a cash payout for you as a homeowner when we submit the documents. All right. So I hope this was super helpful. I wanted to make this quick and as painless as possible, guys. If you have any questions, please reach out to me. My information should be at the bottom of this post and on YouTube and Facebook, anywhere that you need, guys. All right. It's homebuyersnetworking.com. And just reach out if you have a question. I hate to see you battle with the bank, lose your home when you could have gotten some kind of remedy that's a little bit more sensible. All right. Have a great day and thank you.